What's up, guys? I am Joe Von Grichtem. Welcome to Pippin and Dippin Academy's YouTube channel. I got Hunter, the Pip Hunter Burkett, here with me. He's going to rock it out there. Look at he's all sharing the new office. He's all excited. He's like a kid in a candy store right now. Hey, if you're new to our channel and you haven't been here before, welcome. Please do us a favor. Somewhere in one of the corners here, there is a button that says subscribe. Subscribe so you get notified anytime we have a new video. Second, if you love the video, pound that like button, please. Our goal is to help as many traders and just as many people in general add value into their trading. So people just like yourself. And the best way we can do that is by you telling YouTube that, hey, they did a good job. This is good content, by hitting or pounding that like button. Of course, we'd also appreciate any comments. If you are a first-time subscriber, put I subscribe in the comments. And if you have any questions or comments, go ahead and put those in there as well. Without further ado, today we have something that is vitally important to talk to you about when it comes to trading. It's pretty much a non-negotiable for Hunter and I, and you'll understand why here in a second. And it's timing. So without going too far down the rabbit hole, I'm gonna go ahead and hand it over to Hunter. He's going to explain to you what we mean by it's non-negotiable to trade during certain times of the day, that kind of stuff, and why. And there you go, Hunter. It's all yours, brother.
Cool deal. Can you hear me good?
Yep.
Cool.
You sound like you're in Texas.
Heck yeah. So as you can see, guys, I got me a new office, new house. So it's been going pretty good. Glad we're in here. Still, you can see stuff all behind me. Everything's everywhere. You know how it goes when you're moving. But yeah, like Joe said, timing. Timing is a big key component in your trading. And the reason why we know this is because due to our mentors talking to us about timing and just seeing it through back testing and the way that the pair moves, and also it being a part of your edge in the market, right, is a big key too as well, because not only is it a big key for you, an edge in the market for you, you get your time back and stuff like that. You know what I mean? So exit out real quick. Okay, so you get your time back. You know, you're coming to the charts at a certain time, and you're looking for your trade setup, your best perfect trade setup in that box, and that's all you have to do. Once you know that, the it puts I can't even say it, psychological inside of your brain of saying, you're telling yourself, I'm coming here from 7 o'clock till 10 o'clock New York time, right? That's my time. So you'll get yourself in a boost mode, confidence mode of, this is what I'm looking for. You don't have to really worry about what's in the past and stuff like that, because you're looking for your trade setup. You've done looked at the higher time frame, you've done looked at your directional bias, and you're looking for one thing. You're looking for your trade setup in the direction that you want to go, right? And if you can't get it in that time span, then don't trade. It's that simple. Don't trade if it's not there, right? That's the reason why most traders are failing. Even myself, this morning, going against rules, breaking rules, because you get into, when you get on a win streak, you get into this type of mentality of, I'm a beast. The market can't pull me back down. That's the wrong way to look at it, right? And guys, I do journaling all the time with my trades, and most of my losses come from counters, right? I'm not trading with the directional bias that I've already got set on. I start to try to counter trades because I'm being a little bit of impatient. We're not perfect. We're human, and I get my ass put back down. Right, the market humbles me. So, but I want to show you some setups. I want to show you the time process in a perfect trade setup, and how easy it can be. So I'm gonna share my screen. I'll share with you Euro USD. Okay. I want to just show you, directional bias. We can go to the higher time frame on this. I'm just going to box this in so I can see where I'm at. April 21st. You can clearly see, okay, we go to the 4-hour time frame. Okay. I put some more boxes on, and I'll explain to you why. Okay, you can clearly see our market direction is going down. You can clearly see at the beginning of the week of last week, we made a bullish move, right? Which would have been perfect for buys because guys, that was a big massive move. Okay. That was a big massive move. We made a low. Okay. Right. We took in liquidity down here. As you can see, everybody was probably trying to buy here. We had this smoke and smash down, took out liquidity, consolidated, and we got a little run out of it, right? So if you're inside of here, okay, nothing's to the right of us. Let's just say we're right here, and you're starting to understand that the market could be reversing right here. Then you start to understand where are your areas of value where liquidity is laying, okay? Right? That's what you need to figure out. Once you do that, then you're going to know your direction. You'll know your direction. So if you know your direction from this point forward, from down here up to here, you're chasing after liquidity here, then you know your trade setup inside of your days. You'll know what to be looking for, okay? So let's break this down. So as we come into Monday, we do a little consolidation. You can see that we're moving down, right? Right here. So Monday, Tuesday, and as we set this low and we start to move up, okay, as we're moving up, we break Tuesday's high. Okay, cool. All right. So if we're starting to break highs, okay, and our market is shifting, then I start to look at, okay, where is the next liquidity zone? Where is price drawn to, right? And you have to establish this before you can even get to the timing point, right? So let's look at Wednesday. So if I'm chasing after liquidity right here, okay, and I'm looking for a trade setup inside my day, let's go to Wednesday. And I got the boxes on for you. This is London, this is New York, this is Asian. The reason why I have Asian all the way to the market when the market closes, reopens, because I just have that there for me for no trading time. Like I do not trade during Asian whatsoever. I don't want it. It does not, it's not consistent for me. Okay. As you can see, London, okay, perfect pattern. Okay, we trade M&W patterns. Okay, now if you know your market direction is up at this point, okay, and so this is where the timing comes in. So right here when London opens, okay, which is 1 o'clock Central Time, my time. Okay, that's 1 o'clock. So from midnight all the way till 1 o'clock, it's dead time. I don't want to trade in it. Okay, and then you got all the way till 4 o'clock. Okay, inside of here, inside this box, my objective inside this box is to take a trade inside of here. Okay, where's my trade set up inside of this box? The timing aspect. If I'm trading London, okay, so a minute, April 20th. Okay, we established our direction. We know that we're getting a little bullish movement out of it. You can see here, we have a left leg, actually kind of a triple bottom here. Left leg, that right leg takes out this leg, and then we come back up and this leg takes out this leg. It's taking liquidity, guys. As people are getting in, they're setting the stop losses so tight that these little spikes back down are taking their money. Okay. Now, if you watched any of our videos, here's a complete W pattern right here. Okay. We get the close, a nice good volume candle. We get the close above the 13 EMA. There's your entry right there. Okay. You set your stop loss, a 10 pip stop loss for what? What are you chasing? Liquidity. What's to the left of you? There could be highs of what I was showing you on the hour time frame is what we're chasing after, right? Is what we're chasing after. So, and guys too, you do not have to exit your trade. If you're in good solid profit when the session ends, you do not have to exit your trade right away. You don't have to do that. If you're in good solid profit, you're broken even, you're trailing, let the trade run. Let it hit your risk reward that you're chasing after, or let it hit the high that you're chasing after. Okay, the liquidity, wherever the liquidity is laying. And then you can see, I want to go back to the 15-minute time frame right here. I want you to pay attention to this right here. Okay, as the market moved out of London, okay, we had a pullback. Okay, and look how this pullback comes to this gap, this imbalance that's right here. Okay, that it left. I want you to pay attention to that. Okay, and our market's still bullish. We're still thinking bullish. So as the market comes up, okay, we're not trading. We're waiting for New York to happen, and you can see that New York comes down, pulls back into this gap, the imbalance that it left on the 15, and creates another W pattern. Now, once you get into this trade, what are you chasing? You're chasing the highs. Okay, you can see that it stopped at the high and consolidated, come back to your entry, and then if you held that, then yeah, you won. But at the end of the day, you know, if you're an intraday trader, you know, 40 pips off the table for 10 pip stop loss, I think you would have snagged it. You know, that's a 4-to-1, guys. You know what I'm saying? Like a 4-to-1, you can lose the next 4 trades if you're running 10 pip stop losses and be up really heavy. You know what I'm saying? And you can lose the next 4 and be fine. I'm just making an example. Okay. As the market is right now, very volatile. I don't, you know, if you're on the 5 and 1 minute, yeah, you could probably run a 10 pip stop loss. But if you're getting a little late entry, your stop loss is, you know, 15, 20 pips. You know, that's what we've been running. Just with that alone, guys, this knowledge that I'm telling you will transform one specific thing inside of a box that's telling you trade from this time to this time, and that's what's powerful about it. Because guys, this market is moved by an algorithm, okay, and this algorithm is moving at a frequent pace and inside of these trading times, okay. So you want to have your edge inside of these trading times when the algorithm is pushing the market wherever it wants to go, right? Because you got to understand, if there's money, and that's the big key here, you're trading towards the money. Trade towards the money. If there's money laying here, okay, if there's money laying anywhere, then that's where you need to be putting your take profits at, to position yourself because there's stop losses here, guys. There's stop losses laying here and on here. So why wouldn't you want to go and grab that, guys? There's a lot of people losing in this market, still making rookie mistakes, and the market's just, you know, taking them out. So you want to be on the winning side of it. You want to be going with them, not against them, right? So, and you can see, like, we'll bust down to the 5. And you can see that the left leg comes in, right? Okay, we pull up, right leg comes down, stops people out, because people are automatically buying right here as we speak. They see that it pulled back in, we're buying right off the bat. That's why I always wait for the second leg. They're always going to come up in here and manipulate some type of way actually, there's no entry in here. This is all indecision. Like all this wicking going back and forth. There's no real volume to me to even say, hey, this trade's going to go this way or this way. You know what I'm saying? So I like to see the close above the 13, right? And boom, there it is. We get into the trade. We start seeing profit. We get a pullback. We get into minor drawdown. And there's even room for more discounted entries. And then look, we reap the benefits. So we did run a 12 pip stop loss for, 30. I'm good with that. I'm good with that.
Yeah. 2.5 to 1.
Yeah, exactly. So, and guys, you really think about it. Like, I know there's a lot of things, and there's people that do it. You know what I'm saying? There's people that make these 36 to 1 trades and stuff like that. I understand it. It's happening. It happens. Okay. But honestly, think about how many losses they went through to get that. How many stop losses were hit or break evens were hit trying to get those trades? Honestly, the market doesn't move in a massive period like that all the time. It just doesn't. Look, here's a perfect example. You get a trade, it pulls back hard. You get a trade, doesn't go to the high, and it pulls back and it consolidates. You know what I'm saying? How can you say that that happens all the time when you don't even know where the market's going to go? You know what I'm saying? We don't. None of us do. So, and you can see another confluence right here where we have some good divergence on this trade. And there it is. And guys, if you're a fib type of guy, I want you to pay attention to this. So this is a swing low, right? Correct. We go to the swing high. You can see that market pulled all the way back to 62.5%, even a little further. Okay. And then move the other way. Okay. I don't really need the fibs to tell me that because I got my EMAs telling me, I'm getting rejection off these areas. Guys, the 50 moving average, when you get a market that's trending and you get a pullback to the 50, every time that you have a swing low to swing high in a market like that, draw the fibs on it, and I guarantee the 50 moving average is right there. So the 50 moving average is telling you everything you need to know, other than just having to draw fibs on your chart, right? So, but the big key here, guys, is to keep it super simple. Trade inside this time. Look for your best trade setup, right? Put your confluences together and execute. You know what I mean? And then you're going to continue to get better, continue to get better. And then beforehand, you're going to have enough experience under your belt. None of this is going to shower you down. None of this market is going to intimidate you anymore, right? That's the process that you need to get past, is executing, right? You need data. You need data in this market. You need data for yourself so you can boost your confidence. That's what the big key here is. You have lack of confidence in your trading, in yourself. You think you're not worthy of this. Maybe sometimes you're telling yourself that this is not even possible, right? So you need this stuff to gain so you can get past this. It's with anything. It's with anything. How many times in your life have you been thrown into something and your back is against the wall and you perform flawlessly? Right? Do that. Throw yourself against the wall, man. You know what I mean? Come out of that thing swinging, and then you're going to come out with a beautiful mane like a lion. You know what I'm saying? So I'm not saying that it's not going to be hard. It is going to be hard. Forex is hard. If somebody tells you it's easy, it's not. It's just not. But anyway, we set a peak formation high. Right, we took liquidity, as you can see, and the market shifted. So peak reset, and we started shifting. Right, so once we started breaking back down and started breaking lows, started setting more lows. Looky here, we have accumulation. Have a little bitty stop hunt right here. Took out Asian, and we go back down. I can do this again. I can go from swing high, swing low, and you can see that price returned back to what? The 50, right? And you can see inside of here, I want you to pay attention to this. Okay, this is a perfect example. I'm going to go down to the 5-minute. I know it's not a shark fin, which is fine, but it's still showing their hand. Okay, my best trade setup is a shark fin, okay? But I'll show you exactly. So we pull back, we set the first leg, okay? We come in here, nothing is got anything telling me to sell. Okay, there's no real good candles closing below. That's all a bunch of rejection, accumulation, right as New York starts, right? Because our objective is to take a trade inside of this box, correct? All right, so you know for a fact that there's liquidity up here for sure. Okay, and now that, and look, I want you to pay attention to these gaps that are left. Okay, and that's what it's going back to fill. Once it leaves gaps, what I mean by gaps is when a candle prints itself and the wicks doesn't come back and fill any of that candle. It just moves right away, right? So, and you can go back and back test that. You go back and back test all the candles. Eventually price will return them. It might not be instant, but eventually it will. And that right there is a good confidence for me and for my students to say, hey, this trade went back and filled that, and then the market makers showed their hand. Okay, So this is a perfect example. When this high was set, okay, we wasn't in New York yet. New York comes in. Look at this. People started selling right away, right? Then boom, spike. Takes out this liquidity, pulls back in. I would have set like a 1 bar stop or 10 to 20 pips. 15 to 20 pips is my max when I set a trade. Okay. And the reason why is because I don't want to risk that much. I think 30, 35 pip stop losses are too big. But this is the thing. You can set a stop loss that small after you know where the manipulation has already happened. They've done grabbed enough liquidity here where typically they're not going to come back. Why would they? They've got enough. You can tell how fast it pulled back in, right? So look how they do it. They run it, take liquidity, they pull back in, they get breakout traders, and they smash the breakout traders. That's how it happens. And look how it happens. Left leg, right leg, out of the band, into the band, divergence. There's the cross of the market baseline. You could have even got in right here, but I would have waited for the market baseline cross. We did not get no discounted entries. If you did up here, you would have. But you could have set it above this bullish candle, 12 pip stop loss, reap the benefits. 50 pips. Okay? Now understand this. Euro USD moves what? On average, I'm not saying this every day, moves on average from 70 to 80 pips a day. You just scored 50 out of it. You scored 50 pips out of a pair that moves on average. You got to think about it. There's only a certain amount of moves in the market. It has to accumulate, right? And you just scored 50 out of it. Walk away. Take your money and walk away. Come back tomorrow and look for the same stuff, different day, right? And then you'll start to get consistent, and you can get on, guys. There's so much stuff out there right now. FTMO challenges. Our whole Pippin and Dippin Academy is doing FTMO challenges. Even myself, we're doing all doing FTMO challenges right now, right? And we're not me. I took some L's this morning for sure, but my students are crushing it. The reason why is because they're going and they're following their plan. They're staying disciplined with what is being taught, what works, right? And they're reaping the benefits from it. Okay. So this is what I wanted to show you today, is just pure, timing. Timing is everything inside the market, right? Because what other way could you say, okay, if you're a London trader, if you want to trade both sessions, great. If you want to, hurt yourself on sleep, then wherever you're at in the world, if you're in Australia, you catch them both. That's cool. So if you're in, let's say Texas, where I'm from, okay, and you're trading London and New York, you're looking for your trade setup inside these boxes. Okay, 1 to 4 o'clock Central Time. That's my time. Okay, 7 o'clock to 10 o'clock my time, Central Time. Okay, so put that towards your time, wherever you're at, Eastern or the West Coast. Okay, so it's really simple, guys. It's really simple how these trades present themselves. Like EuroCAD, I want to show a couple more trades on EuroCAD in the video. You can see, and like I said, guys, you're not going to be able to trade everything. You could be trading during New York, and London had a beautiful pattern, and it's already moved enough where New York accumulates. And there's nothing wrong with it. There's nothing wrong with waiting and going either having another pair on your chart or waiting for tomorrow to catch a trade that's going to perform, right? So looky here. So let's go to the 1 hour time frame. I want to check out that. Yeah, so check it out. look how, oh, I better go back to 4. Look how, look how this area of value was right here, okay? And the reason why I'm only paying attention to this, guys, paying attention to this high is because nothing's been there back. Nothing's been there back. So I'm pretty sure that there's orders laying right here. There's orders laying right here. There's liquidity. Okay. So I'm not really concerned about this area unless we get past it. But get past this one first. You know what I'm saying? This would be like, man, we got to get through Thanksgiving first before we hit Christmas. You know? So we go to the hour and you can see, I'll zoom in on this. I know that my chart looks bad with all those boxes. Let me zoom out a little bit. Okay, so right here, you see this bullish candle right here, okay? That right there, this double top, multi-day M session. You guys heard me talk about multi-days all the time. Multi-day reversal, pull back, there's your trade, pull back, there's your trade, pull back, there's your trade, pull back, there's your trade. You're just going with the trend. You're waiting for your pullbacks. And typically, guys, every time you get a pullback in a direction of your trend, okay, pay attention to this. Direction of your trend, you get a pullback. That's typically a shark fin on a 30-minute or hour or 15. And you can go down to the lower time frame and catch your pattern and then take the trade down or up, okay? And typically, those right there will be taking out liquidity. And that's what you want to see. That's what you want to see. If they're taking out Asian high, or if they're taking out yesterday's high, or whatever, that's what you want to see. Okay, so like, or going back to fill a gap that it left, like in this case right here. So this right here left this gap right here. We returned, set the pattern, took out Asian high, took out liquidity, and then dropped. Okay, so as you can see that our price, we returned bullish from right here. I want to talk about this move. Okay, so we returned bullish and we returned back to this order block and we respected. As we started to break down, okay, we started breaking lows again, okay, and we started making patterns back to the downside. I'm like, okay, our market is shifted. Now what are we after? We're after what? The lows. We're after liquidity, okay? This is the hour time frame. This is easy, okay? So now where's my high probability set? Right here, Tuesday, boom. Okay, let's go to 15. 1 hour shark fin, you've seen that, right? So we have a W pattern set up. Look at that. Look how it's set up and gave you the trade for a counter inside of New York, which was okay. You could have taken this. A little bit riskier trade because you're going against the direction of the market, but I want you. Asian high has a high set, right? Liquidity. There's people that are stealing sells right here, guys. It goes up in New York, takes out Asian high, then look, sets the pattern. Look at that. 15-minute shark fin. Okay. Let's go to the 1 minute. 126. Right there. Look at that. Look at that. So before I showed you all this, okay, this right here had a lot of fair value, imbalances right here, okay? Had a lot of imbalances right here on that move up. And I seen that, okay? And now I seen that it took liquidity at the Asian high, okay? And my directional bias is down. I'm chasing after liquidity to the downside, okay? So look at this. So boom, I set a leg, okay? Right there. We come down. I'm not chasing this because I'm waiting for this to be taken out. Okay. I'm waiting for this leg to be taken out. So when it comes up, comes back down, I'm not entering. Okay. That's how it gets you, a false move. Okay. So then it comes up. Once this comes and closes below this 13, I entered the market and I put my stop loss past that high. I'm not really setting an 8, 9, 7 pip stop loss. I set a 10 to give it some breathing room. And as you can see that it came down, made a second leg, another leg, and then it crashed. Okay. It crashed. And chasing after what? Liquidity, feeling that imbalance, and going after the lows, right? And that's what time frame, guys. Same concept. You've seen the M pattern. It's right there. Look at the imbalances here, right here. Candles with no wicks, anything, and that's where you can see how price comes all the way to there, and look how boom, pulls back, comes back down, comes back up, and look where this imbalance is, right here. No wicks, and it comes back and fills it, pulls away from it. Okay. So them are good target areas too as well, guys. If you want to use them, go back and back test it. I promise you. In these candles that move right away with no wicks. Okay. And what I mean by that is right here. So you have this candle right there, the close of that candle, and the close of this candle. Okay. You can see that there's a gap. Like that candle has no wicks. It retesting anything on inside that candle. Okay. It just moved away. So you can see how price, boom, returns, boom, returns. Look how it's rejecting this area. Okay. I can do the same thing right here. Boom. Boom. Look how price perfectly comes in here. Okay. So, and guys, either way, you can go back and back test this all you want, but this was the real sauce. This is the timing. The timing. You called the trade inside of this box, and you reap the benefits. Okay. Whatever happens after this box, just let it go. You know what I mean? Get your time back. It is possible to trade through Forex. Okay. There's enough pairs. There's enough trades. Guys, if you're getting funded for $50,000 to $100,000 on an FTMO challenge, guys, you don't even have to take like 5 to 10 trades a month, still make a good income. You know what I mean? If you're playing your cards right. So, and just go do the math. You know what I mean? Hope you got value out of this. Like Joe talks about all the time, I do ramble a little bit because I feel like that I need to get everything across so you can understand. So if you did not catch some of the things that you're struggling with, that maybe didn't make sense to you, put in the comments section what you want us to shoot, and we will shoot it for you. Okay. So we can get your questions answered. Other than that, Joe, you got anything to add?
No, just going to summarize. Hey, that was a great job, Hunter. Just summarizing, guys, you saw him looking at three time frames. You saw the Asian was the light blue box, the dark gray was the London box, and the New York time was the red box. And how we always trade, pretty much our non-negotiable, we don't usually trade. Neither one of us trade at all during Asian. London and New York are the two ones to trade. The reason why is that's when there's the most volume in the market, and it's because they overlap. There's a little overlap from Asian into New York, into London, and then there's a big overlap of London into New York, and that's why it creates so much movement in the market, so much liquidity there, so that it can push, one way or the other. So just really, really important. The reason he was showing those, not only he gave you so much more sauce than just timing there, guys. He showed you fair market gaps. He showed you shark fins. He showed you how divergence. He showed you how to read the TDI, how to use it, a little bit of everything. But the biggest thing, the most important thing that he showed you there, if you missed it, was to trade in those windows. And anything outside of those windows, don't worry about it, because like he said, there'll be other trades. There'll be other trades to go. If you're trading with a huge account, you get a funded FTMO account with $50,000 or $100,000, like he said, you make 10% on $100,000. That's 10 grand a month that you're grossing in an FTMO, and they pay somewhere in the 80% range. Sometimes they pay a little bit higher if you're going in with the aggressive account. So the whole thing behind it, guys, is it doesn't take a lot. It takes more what's between the ears, the mindset, and being disciplined, having non-negotiables. Knowing what your plan is before you get into your charts, like know how much percentage of equity you're shooting for the day. And once you hit it, you're done. You stop trading. You get up, you're disciplined, you walk away, go do your thing, exercise, go start your day, whatever the case may be. However, if you need a little bit more hand-holding, we're here, guys. We're here for you. We have a group now that has been running an academy for over a year. We'd love to have you in the group. So if you have questions about that, please send us a message. You can send it in the comments, or you can direct message us, through Facebook, to Hunter or myself as well. So other than that, Hunter, this was good. One last thing I would talk about too, just one last little nugget, as one of the things that you saw is the only time we trade against the 200 and counter against the 200 is when we know it's gotten to one of those liquidity areas from a higher time frame. So like the 4-hour or above. Once it's gotten there, then we're willing to look at a counter against the 200. But the 200 EMA that you saw, the white line or the Mayo, as market makers call it, trade with it. It is your friend. The trend is your friend. With that, guys, thank you so much, Hunter. Freaking awesome. As always, brother. I appreciate you. And until next time, guys, we will see you at the next video. Until then, take care. Bye-bye.
Peace.